Well, there's an awful lot there with the Greater Depression. And, that makes one think about standard of life for just everyday consumer items. For example, things like scarcity in energy and scarcity in food. And I know that you have some pretty strong opinions about food riots with higher inflation, with a higher cost in one's everyday sustenance. This is really important stuff. And, oftentimes I think about these sorts of things, maybe a food riot transpiring in a developing nation, whether that's Tajikistan or Mauritania or the Philippines or Mali or wherever it might be, before coming to the United States. And, oftentimes you think of consumer spending in some of those developing nations like that. You might have a person that spends 70% of their income on food. So if food prices double, you can see how that's a problem and how that would create a riot. Now, here in America, I don't know what percent of my income I spend on food. Maybe it's only 5%. If that doubled, I could weather it. It might lower my quality of life somewhat. But what are your thoughts about food riots? Are we seeing more of this with increasing inflation and a decreased supply of everyday consumer goods?
Well, I trade commodities, among other things. And generally speaking, the cost of food on a raw material basis is about doubled. I mean, the price of wheat has gone from $5 to $10. Price of soybeans, 8 to 16, more or less. Corn, 4 to 8. So this is going to be reflected right down the line in a lot of ways. And the cost of natural gas, for instance, which is critical to not only people heating their homes, but to making fertilizers and plastics, is about quadrupled. Although I've got to say, even now, natural gas in the United States, even though it's close to the highest level that we've ever had here, is only a quarter of world levels. So there's a lot of room left to run. There's going to be knock-on effects all the way around. But you're quite correct. It's in these third world countries. In many cases, I don't even call them developing countries. I've been to 155, 160 countries, something on that order. Most of them, many times. I've lived in 12 countries. And at this point, I've got to tell you, I'm not sure that developing countries is even the right term.
It's a genteel term.
They're backward, and they're getting more backward. They're sliding downhill, especially the poor people in these countries that can barely keep body and soul together. So as all these prices go up, the cost of their cooking oil, the cost of their rice, their beans, their gasoline that they need for their little handheld tractors to plow their acre of ground. It's become quite nasty for them, and I'm afraid it's going to get much worse. You said we're in for interesting times, and I'm sure you recall that is said to be an old Chinese curse. May you live in interesting times. And they're going to be very interesting, starting the rest of this year, next year, the year after, and it's going to go on for quite a while. So hold on to your hat. I mean, a lot of stocks, the kind of meme stocks that the Robinhood people have been buying, many are down 50%, 80%, 90%, but it can get much, much worse. I can give you lots of historical examples of that. And I know that a lot of your listeners are interested in real estate. I've been very actively involved in the real estate business for many years, and I'm a bear on real estate as well. The only good thing about real estate right now is that at least you're getting out of the dollar. At least you're getting into a tangible asset with real estate. That's the good news. But the bad news is in the United States anyway. This is not true everywhere in the world, but it's true in the United States and Canada, that the real estate market floats on a sea of debt. And interest rates, I think they're going to have to go back to all-time highs. So why? Why do I say that? Because retail price increases are running 10 to 15% per year. That's the real number, not the government's. People that lend money, people that buy bonds say, wait a minute, I'm getting 2%, 3%, maybe 5%. I'm losing 10% per year.
They're locking in a loss in prosperity.
That's exactly right. There's going to be a waterfall of selling in bonds. Interest rates are going way up. That's what happens when bond prices go down, interest rates are up. And it's going to be very hard to finance houses in the U.S. at the kind of interest rates we're going to see. And in the U.S., if you can't borrow money, you can't buy or sell a house today. Even while the dollar is losing value, we have the paradox of a lot of real estate is going to go down in price even while the dollar is losing value. That sounds like a contradiction, but it's not. These things happen in markets.